I've got Owen with me again, so let's get on with it again. Owen.
Yeah.
If we look at the rand since the beginning of April, first week strengthening a little bit, and then it started to weaken consistently. At the same time, the xenophobic violence kicked off, but we also had the likes of the ruble, the Turkish lira, the Brazilian lira, all starting to fall at the same time. So what do we put it down to?
No, look, I mean, I think this is a global markets play. You must understand that the currency, especially the rand, is the most liquid currency in the emerging markets. It's the best tradable currency out there in the world. So when there's a view on emerging markets, Turkey, Brazil, Russia, India, South Africa, the rand is going to move faster than any of those currencies because we've got very developed markets. So the doubles are nice and tight. People aggressively going and sell the currency. Like you rightfully mentioned, it's not just a rand-specific occurrence. And I don't think that, I think that actually the investors that invest in South Africa have gotten used to the fact that there's always going to be either a strike in South Africa, there's going to be some action in Parliament, you know, there's going to be all this negative stuff happening in the press, and all these xenophobic attacks that are very unfortunate have also been flagged globally. But I think the investors kind of take a very long-term view of investments in the country. So I doubt that the recent fall can be attributed to xenophobia. Sentiment definitely is concerning globally, but I think it's all in line with the fact that the Brazilian currency is weakening, the Russian ruble is weakening, etc., etc. And there was a move recently by one of the major markets to weaken their currency, which is obviously the ruble that's in Russia, because it had been firming up a little bit, so they had to control it a little.
Did the Russian action spur the rest of the emerging market sell-off? Or was there something else?
No, I think there's probably other news, but we haven't managed to pick up anything out there. I suspect potentially someone has a very big trading basket, or there's a big theme out there being discussed in the big trading banks, trading desks globally. They're saying, you know what, it's time to sell these currencies in the major market space. You can expect volatility to continue in the currency markets, especially in the emerging markets, as long as there's more money being pumped into developed economies.
This Greek thing has also been used often in the press as a reason to sell emerging market currencies, but I still fail to see the link.
Yes, I mean, it's difficult to link that with the decline in the emerging market currencies. What I can tell you is that we are viewed as a risk class. So for high returns and potentially higher risk, people are playing the emerging market space. Greece defaults, there's going to be a sell-off in the emerging markets currencies as well as in the world. You know? So let's hope that the Eurozone and Greece do manage to sort things out. We need some stability in the markets out there.
Thank you for your time, Owen.
Thank you very much, sir.
There we go. Owen Nkomo from Nkunzi Investments.